Lovely. Oh, got it. What's today? Wednesday?
Yeah,
Lovely
today is a
morning.
Wednesday. Yeah, the 18th.
It all blends together, right?
Correct.
So thank you guys for joining. Looks like we have a few more attendees than normal when I'm on here, so that's great. I wanted to talk to you guys about a few tactics and sentiments that we can talk to our buyers about that I think will help you guys in the long run and kind of get through this temporary market that we're in here with these rate hikes. So I'll just kind of dive right into it. There's no secret that the Federal Reserve is trying to hold off or stop inflation, right? They're trying to curb it a little bit. So they're hiking up the Fed fund rate, which is essentially the rate that banks borrow from each other. And they're saying that potentially another increase is coming in June as well, which doesn't directly impact mortgage rates, but it does impact bonds, mortgage bonds, which does impact mortgage rates. So what essentially has always happened every time the Fed has tried to do something like this, it's pushed us into a recession. And typically when there is a recession, that means, some employment numbers go down. Right now, the country is essentially the most employed it's ever been. But when employment starts to, or unemployment starts to rise, then that's when the bond market starts to perform a little bit better. So it's kind of a catch-22 where if our economy slows down, then generally that's a good thing for mortgage rates. So how that can help with some of our buyers is kind of explaining to them, and this is some of the things that I'm explaining to them, is that purchasing a home, and there's a lot of negative news right now about interest rates. Anytime you go on Google or whatever the case may be, social media, you're seeing all these things about interest rates going up, which can deter some of our buyers, right? Put a negative connotation to buying a home. But what I'm explaining to them is that, hey, look, buying a home, we go over all the benefits, pros and cons. We've gone over that before, right? The benefit of buying a home as opposed to renting. Matter of fact, rents, I just looked up the CoreLogic data. Rents are up rent fees are up 14% year over year. So rents aren't going down anytime soon and continue to go up. But even if, so quote unquote, the rate that they're taking now is higher than where it was been at, obviously the last 2 years, with a recession looming, we always have an opportunity to refinance that particular mortgage, right? So the sentiment around the lending community is that we are going to have opportunities within 12 to 18 months, most likely, to knock down some of these interest rates that we're giving folks in, the 5% or even 6% for some folks with, lower credit scores. So number one, that's something that I'm always preaching to these new buyers and these new applications when we're talking about, monthly payments and interest rates, is that, hey, look, this is a fixed rate, right? The investment of the real estate, the investment of the home is still there. I totally, break that down to them and show them, even in a modest appreciation market, we're getting at least 3 to 4%, right? It's been crazy the last couple of years, but in a moderate market, 2 to 3 to 4% of appreciation is still going to be there, and that the monthly payment that they're going to have to pay will come down eventually. We will have a break where we can refinance that mortgage and get them into a lower rate. So that's number one. That's one thing that I'm preaching to our buyers, to basically not give them that shock where they're kind of, anticipating that this is a negative thing because of where rates are at or monthly payments. And then the second thing I'm showing them, and I want to show you guys, and this could potentially help you with, Charisma, can you make it so that I can share my screen?
Give it a try now.
What's that?
Can you give it a try now?
Oh, there we go. Perfect.
Okay.
All right. And so another thing, this is what I was talking with Eva about the other day, is in regards to if monthly payment is a concern, which normally it is when someone's looking to buy a home. That's their main concern. They obviously don't even think about particularly exact rates. They're more concerned with, hey, what's my monthly payment? So I have an example up here on, I just kind of worked up another file that we have on a $650,000 purchase price. Now, let's just say that we are, looking to offer, and maybe in this market, the house you may feel is slightly overpriced, and maybe the home buyer is wanting to offer under list price. And this is where definitely negotiating or talking and kind of feeling out that listing agent, asking some questions, getting the kind of mindset of that seller can really help you guys with communication. But I want to show you something. So let's just focus on the principal and interest payment right now, which is in this particular scenario with a 5% down payment at a 5.75 rate, which this particular rate would come with no buy down cost, so no points. You'd have a $3,600 monthly payment. Now, let's just say that the buyer was like, well, I want to offer less, and they think that the reduction in price is going to really drastically drop their payment. And so let's say they say, well, we want to offer, 15,000 under that 650 purchase price. So that would put them at 635 with the same rate and fee structure that's worked up. They don't want to buy down points. They feel like, rates are going to go down in the future. So a $15,000 reduction to their purchase price with 5% down at that same interest rate only drops the payment to $3,520, right? So we're at $3,604, $3,520. So that saves them $84 per month on their monthly payment by taking $15,000 off the purchase price. Now, the flip side of that is, especially if they are payment conscious, is if we had a seller credit instead. So we left the purchase price at that 650, but we asked for, I don't know, the 15,000 in price reduction. Instead, we get for a seller credit, and we're able to buy down their interest rate. Okay. So with a $15,000 buy down, we could probably get it on this purchase price down to about a 4.99 rate. So 650 still, 5% down, going from a 5.7 to a 4.99, that drops their principal and interest payment down to $3,311. So now we're talking about a $293 savings per month. So that's pretty significant, right? As opposed to just dropping the purchase price. So that's something that we could potentially use to help both of these. I mean, essentially, the seller's not having to give up much more than a price reduction. And maybe in their head, they're thinking, okay, well, I'm still selling it for $650, but it's essentially the net thing, but it still helps the buyer accomplish what they're essentially trying to accomplish, which is lower that monthly payment by a price reduction, but instead we're doing a very large interest rate reduction. Does that make sense? So that's one thing that we can do to help these buyers essentially get what they want, get a win-win. They're still getting a reduction in that monthly payment, which is, it seems like their main concern, right? So that's one thing there. Any questions on that real quick before I move on to the next subject?
Nope.
Nope. Everyone kind of got that?
Yeah, I think we're good.
Okay, cool. And then the next thing that I wanted to discuss with you guys, and I sent an email out about this maybe about a week or 2 weeks ago, was this new program that that CalHFA threw out there. And a lot of folks were talking about it. And it really is a good conversation starter. It's something that you can promote that at least can get people interested in buying, right? It's there. And this is something you guys can access as well. You just go to calhfa.com or Google CalHFA and it'll pop up. It is their forgivable equity builder loan. So essentially, they can get up to 10% of the loan amount towards their down payment and closing costs. The only downside to this, now I don't think too many people are going to actually qualify because it's just a little thin and just where home prices are at. The only downside is that there is a cap to the income in San Joaquin County. You can only make $59,200 annually, and that's, you know, husband and wife or if someone's single. So that doesn't leave a ton of wiggle room for their debt ratio. I did a calculation on it, and someone with zero other debt, like no car payment, no student loans, no credit card payments, if they made that, you know, let's say 59,000 or less, to be able to keep the debt ratio below 45% with today's rates, which would be a much better rate than most are getting, a 5.25%, they're looking at probably somewhere in like the 300 to 315 range, depending on how much money they actually have. At that 300 to 315 price range, they would essentially have to come up with zero out-of-pocket funds. I mean, it's a legitimate, you get a 5% down, you got the other percentage to cover closing costs. There's a 2% fee that CalHFA charges, so that would be absorbed in that as well. But it is something you can use and promote to get people interested and maybe just, you know, put an application in or want to start looking at buying a home. It is forgivable as well after 5 years. If they stay in the home after 5 years, that 10%, which would be a second mortgage, is forgivable. So that's also really, really nice, really cool. Because that's the main thing, right? We want to just get people engaged and get them actively looking and wanting to get involved in the housing market. And if this is something that comes up, we get an application, and let's just say, for example, they either don't qualify or that price range just isn't going to find them the type of home that we want. Well, then at least we can start looking at other avenues. Maybe we can add on, you know, a co-signer to help bump up their purchase price, things like that. So that is a program that's available. Unfortunately, I just don't see too many homes in that, you know, 300, or especially if they have an auto loan or something like that, it would kick down their purchase price probably into like the mid twos, which we all know that that's a little difficult as well. But it is something to promote to at least get the conversation going. So tell me right now, guys, what's something that that you're facing, or do you have any questions, any, you know, anything that's kind of common objections that are coming up that you're having to deal with? Talk to me a little bit. Tell me what you're seeing out there.
I have questions.
Yeah.
Hi, my name's Alyssa.
Yeah.
So I guess I kind of want to know what you're projecting for the rest of the year, because obviously the Fed is projecting 2 more rate increases. Do you think, how high do you think interest rates can go? And then actually, that'll be my first question. I'll just stop it there.
Yeah, no. Yeah, I can still see interest rates going up. So for example, like right now, if you went to Freddie Mac's website and looked at their rate survey, right now they're saying the national average for rates are at a 5.4% today. And that's with using almost a full point in buy down costs. So I could see the average going up into the low 6s easily by end of year. That's totally, you know, could be a thing for sure.
Okay. And then my second question was, the scary R, recession word, is where interest rates can sometimes come down with that. Do you think that could happen towards the end of the year? So we might peak 6, potentially 7, and then come back down a little bit? Or do you think they're going to hold?
I think they would hold in the 6s. I would be really shocked if it went up into the 7s. As far as having a recession start to impact mortgage rates, kind of the sentiment in the lending community is that would maybe, if we got that, right, if that really impacted us, we're looking at maybe the beginning of next year to the mid of next year would be like, that would be really nice, but it could potentially be at the end of next year as well. So when I tell someone right now, if I'm quoting them a payment, I'm saying, hey, look, you may have to stay in this payment for 12 to 18 months. Maybe not, maybe we're completely wrong. And the rate they're getting now is, you know, as good as it's going to get. I mean, obviously that's a chance, but I would say 12 to 18 months is my projection where we can potentially refinance some of these folks that are, you know, having to lock in some of these above average rates that we're not used to the last couple of years.
Okay, cool. I'll let other people ask questions before I rattle more at you.
Yeah, no worries. Anyone else? Desiree, I see you're on here. Come on. I know you got something. Nope.
So for the people that are saying that they want to hold off until summer or next year, that's not the best idea, right? Because it's going to make what they can afford go down, right?
Yeah, I mean, I don't think there's any data out there that really supports that home prices are necessarily going to go down.
Right.
You know, we still have limited inventory, right? So trying to time the real estate market is pretty difficult, especially I think one of the major questions that we all need to be asking, and we should be asking, is what is your goal for the property, right? Why are you buying? Why now? And how long do you plan on being in the home? If it's someone that's looking to, you know, buy for a short term, I don't know, 1.5 years, 2 years, then that's a completely different conversation than someone that's like, oh, I'm looking to buy and be here for the next 5 to 10 years, right?
Mhm.
So at that point, it comes down to more of, I mean, I don't see home prices necessarily coming down 5 years from now.
Right.
If anything, I think they stabilize, right? I think what this is doing is making it maybe a little bit less competitive from a buying standpoint. The supply and demand issue is still there. So buying now, hopefully getting some appreciation over the next year, 2 years, and then looking for a refinance opportunity to knock that payment down, I think is a pretty solid plan for them, as opposed to waiting and hoping that, you know, rates go down and then essentially home prices go down in a year from now. I just don't see that happening. If anything, buy now, refinance later.
Perfect. Thank you.
And coupled with the fact that, I mean, what is their other option, right? Rents year over year up 14%. And you guys know that, I mean, I know Eva had, I think, a really good video on that. A good saying is when you're paying rent, you're paying 1,000% interest or 100% interest, right? It's not helping you out at all. If you're looking to buy a home and you're going to be there for the next 5, 6, 7 years, I mean, that's the kickstart to starting your portfolio and your future. You know, that's one of the things that I love to lay out, kind of the future for these applicants when we're having our loan consultation with them and going over their approval is, hey, you know, what are your goals long term? Do you want to, you know, be 50 or 60 with a few multiple homes? Like, this home that you're buying most likely isn't your dream home or the home you're going to live in forever. It's a step to keep building equity and learning how to manage that. What's up, Alyssa? What you got?
Sorry. My next
it's all
question
good.
is, what are you seeing on the purchase application side? Because obviously the refi market's gone. And then I know that slowed down a little bit. Are you starting to see it kick back up again, or is it steady?
No, I mean, the applications are definitely a lot lower than from where we were used to. Again, the market the last 2 years, though, 2020, 2021, I mean, that was abnormal, right? We were just, it was just insane. So naturally, when there's a, you know, 2% hike in rates in a short term, I think it was the sharpest rate hike since 2009. So it's been really, really kind of abrupt, but yeah, I mean, we've definitely seen a decrease in applications because of that.
Okay. I feel like that's always a good indicator for us. If you're getting a decrease, you're the first domino. So then we can see what's coming on our end. And I've noticed for me, a pretty significant market shift in how long things are staying on the market, how not as crazy over asking they're going and whatnot. So perfect. I was just curious about that.
What are you in the Tracy market as well? I think this is the first time.
I live in Livermore. I do both, but I'm based here in the Bay.
Oh, gotcha. Okay. Yeah. What's the average time that a house is on the market out there right now?
So the median days was 11 when I looked yesterday. And I've only noticed this shift in the past like 2-3 weeks since the Fed increased its rate. I think a lot of buyers just kind of freaked out, even though the mortgage rates were already higher. They finally, I think, caught on a little bit. So that's what I was seeing. And then I know a lot of other realtors in my area have been seeing that houses are staying on 2, potentially even 3 weeks. And then houses and even price reductions. I'm seeing actual significant price, $100,000 price reductions because sellers have been freaking out on our end. And they're like, we're not selling in a weekend. It's okay.
Right. So maybe that gives us, I mean, I don't know if it's a complete shift to a buyer's market now, but I think
Right.
that does give, and that was the example I tried to give. And maybe I was using a little bit lower sales price for the Livermore range, but I think that's perfectly ties into what I'm talking about is if you have a little bit of leverage, if a house has been on the market a little bit longer, if the sellers are either contemplating a price reduction, maybe you can get, you know, instead of them doing a $50,000 price reduction, they can still do a slight price reduction, but then also give a seller credit to help buy down the rate if that is a major concern. And if that buyer is really payment sensitive, that's in my eyes a win-win for them, right? And then we can map it out and say, well, hey, if you're saving an extra $300 per month, you extrapolate that over the next 5 years, and you know, it kind of takes away the sales point of like, hey, well, you can refinance, but if that's, you know, again, the refi isn't guaranteed. It isn't guaranteed that rates are going to get back down into the 4s. I hope and I think that they would, but you know, that's something that we can definitely use to our advantage to really help. And I think that shows your expertise, right? Like whenever you're dealing with these folks, if you can give them options and sound knowledgeable, I think number one, that'll keep them with you from a relationship standpoint as well.
Mm-hmm. Yeah, no, it's perfect. I was just curious of your perspective. Awesome.
Yeah, no, absolutely. Thank you for the question. So those are the main things that I wanted to cover today, guys, was just showing you kind of the difference in either a price reduction and what that would do to someone's payment, or using a rate buy down and getting some seller credit. Alyssa, for you, that CalHFA equity builder loan, actually the income difference is quite a big difference. You can have under, I think, $106,000 a year in annual income. So that might open things up a little bit more for some of your first time buyers out there in Alameda County. But overall, I think at this point, we just need to dig a little deeper when we're talking with these folks, kind of explain the market, sound, you know, as knowledgeable as possible, talk about the fact that rates are going to, or not rates, but rents are up 14% year over year. They're going to continue to go up, especially if they're, you know, right now we're facing a situation, right, where if someone was even thinking about selling, they have to think about where they're going to go, right? If they were like, well, I want to take advantage of this market, I want to sell my house at the peak price and try to cash in. Well, if that happens, then that's going to create an even more of a demand on the rental side. If they're not trying to buy now, if they're thinking, well, I don't want to buy in this market, prices are high, rates are high, well, that's going to even drive rents up more. So, you know, things like that, market updates, kind of big picture scenarios, I think can just help create a little more trust and show that you're, you know, knowledgeable about the market, which, you know, at this point, we just have to convert at the highest level possible. Every lead, every opportunity we get, the better we sound, the better we can inform and sound knowledge-based, like Ron likes to say, is going to help us in the long run and help us convert. That's all I got for you guys, unless anyone else has any other questions, or if there is anything you want to talk about with your personal business tactics or things that you can do to help drum up more business, you can always reach out to me. Give me a call, shoot me a text, send me an email, and we could set up a, you know, a sidebar meeting where we can talk about your own personal production as well.
Hey, Josh, real quick, I have a question. You sent out an email the other day about the VA loans. Can you go over that really quick?
Yes. So there is, you know, a common, which is unfortunate, right? Because obviously, I mean, I have 2 brothers that were in the Navy, and, you know, I do a lot of VA loans. A lot of times our VA offers don't get looked at as kindly by listing agents and by sellers, because there's the assumption that, you know, on the pest report, on a VA loan, we normally the lender will review that pest inspection and all section 1 and section 2 items need to be cleared. And a lot of times there's a lot of rinky-dink small things that pop up on there that don't really have anything to do with actual termites. When I sent out that email, for example, there was, I think, a leaky gutter or something like that, right? Little things that would need to be fixed and that we would have to see cleared from a lending perspective to be able to fund that loan. Well, there's that form that I sent out, the NPMA 33, which is an acceptable form in the lending, on the lending side, on the underwriting side. And we just have to get the pest inspector to basically state whether there was visible termites or not. It doesn't really get into all the other stuff. So that form, assuming that, let's say that there weren't any visible, pests, observations or anything like that, then that form can be used in lieu of you guys sending us the entire pest inspection and then having an underwriter look through it and condition for all these different repairs that need to be done. So, when submitting that offer, make sure that if it is a VA offer, make sure, and I'll make sure as well, that we talk to that listing agent and say, hey, look, don't think that this is, not an attractive buyer just because it's VA and you're worried about the pest inspection. Here's a form. As long as we can get the pest inspection company to fill this out, and as long as there isn't any visible, termite, obviously, if there is, we don't need to review that pest inspection. Obviously, as an agent, you guys will still be able to get that report and negotiate with the listing agent on the buyer's behalf, maybe get like a seller credit to cover some of those items. But from a lending perspective, just send us that form, and that makes the underwriting process and the condition process much, much smoother and cleaner. So I think it can really help prop up some of our VA buyers and even make their offer look a little stronger with the kind of common, thoughts that VA loans are difficult on a seller because they have to do a bunch of repairs.
Okay, cool. Thank you.
Yep. And for some reason, not a lot of folks know about that form. I mean, I just recently learned about it as well. That's why I got it over to you guys. So, but it is something, I believe it's a little bit newer to California. I think other states have been using it. So it's something that we can really use to our advantage, I think. And Alyssa, did I not have you on that email? Oh, cool. I'll get that over to you. Okay.
Awesome. Thank you.
Yeah, you got it. Alyssa at hbrteam.com. All right, guys. Well, it was great checking in with you. Hopefully that information was helpful and can help you, close a few more deals and work a little more closely with your buyers and get them figured out.
Thanks so much, Josh, for joining us again today.
You got it.
Awesome.
All right,
Thank you for
guys.
your time.
Bye, everyone.
Yeah.
Have a good day.